Hello everyone, welcome back to my InvestWise channel. If you are trading the SP 500 today, this update is for you. In this video, we will cover the latest market moving news, important economics events, and the key technical levels that could drive the SP 500 in the today session. Let's get started.
When you're driving a sports car, right? Like pedal to the metal, the RPMs are just redlining.
Oh yeah, it's thrilling, but dangerous.
Exactly. You can't keep it there forever. Eventually you have to take your foot off the gas or the engine blows. And today, June 24, 2026, Wall Street just slammed on the brakes.
Big time. I mean, the NASDAQ plunged over 500 points.
Right. So today we're diving straight into this massive AI sell-off where all that money is actually hiding and what the S&P 500 charts are signaling for what happens next.
The sheer aggression behind the profit-taking in semiconductors today is, well, it's telling. We're seeing heavyweights like SanDisk drop sharply.
Yeah.
And Micron technology is sliding right before their highly anticipated earnings report.
Wait, dumping Micron before earnings? I mean, let's unpack that. Doesn't that suggest Wall Street is just terrified that even good news won't justify these massive AI valuations?
Yeah, it absolutely does. Sentiment is shifting fast. But what's fascinating is that while tech was bleeding, the Dow Jones barely flinched.
Right, it feels like half a market didn't even get the memo.
Exactly. And that's classic sector rotation playing out in real time. The capital isn't just evaporating into thin air. Investors are taking those outsized tech gains and, parking them in safer defensive stocks.
So they aren't abandoning the market, just building a fortress.
Right, building a fortress to protect their capital while tech cools off. And this defensive posturing is definitely leaving a mark on the S&P 500 chart.
Oh, for sure. We're sitting at around 7,365 right now. But if you look at the macro view, like the weekly chart, it still looks surprisingly warm and bullish.
It does. I mean, despite the NASDAQ bloodbath, the S&P is still trading comfortably above the weekly 21 EMA.
Which shows buyers are still fundamentally in control of the macro picture, right?
Yeah, definitely. And below the current price, we have some massive demand zones at 6,350, 5,000, and further down around 3,500.
Wow, those are deep.
Yeah, they aren't just arbitrary numbers, Those are historical battlegrounds where institutional buyers always step in.
Okay, so the weekly chart is the climate, which is warm, but the daily chart is the weather. And right now, the weather is looking pretty stormy.
Oh, absolutely stormy. The index actually slipped below the daily 21 EMA, and we are seeing clear bearish divergence on the daily RSI.
So momentum is just fading.
Exactly.
Yeah, and breaking back above that recent gap down is going to be brutal. That's acting as a heavy supply zone near, 7,580?
Right around 7,580, yeah. That's stiff resistance standing in the way of retesting the 7,625 all-time high. But honestly, before we look up, we really need to look down at the 4-hour chart.
What's the critical pivot there?
It's 7,260. That is the immediate floor. If we break and close below 7,260, the selling pressure could easily flush the index down to the 7,100 psychological level.
Oh, wow. Or even down to 6,700, right?
Exactly. And the timing is tricky because these technical levels are about to collide with some serious macroeconomic gravity this week.
Right, the fundamentals. We have U.S. GDP data and initial jobless claims hitting the wire.
Plus, Friday's core PCE inflation report. And since that is, the Fed's preferred inflation gauge, it's the exact metric that will dictate whether the macro climate stays warm or turns totally hostile.
Which leaves us with the billion-dollar question for everyone listening.
Right.
If you've been shifting your capital out of that redlining tech sports car and hiding it in the safe haven of the Dow, what happens if Friday's PCE data comes in hotter than expected?
That is the big risk. I mean, a hot PCE print could stall the engine across every single sector.
Will those defensive stocks actually shield your portfolio? Or will this targeted tech rotation turn into a total market pileup?
There might not be anywhere to hide.
Yeah, that's the dynamic we will be tracking closely as we close out the week. If you want to navigate these levels and stay ahead of the rotation, make sure to like this video and subscribe to the Investors Edge YouTube channel. We break down the market action every single day. Thanks for joining us and keep your eyes on the road ahead.